As the clock ticks towards 2024, the energy landscape is at a crossroads. The question looms, will there be a diesel shortage in the coming year? With industries from transportation to agriculture depending on this fuel, the stakes are high. Let's delve into the factors that could shape the future of diesel. Diesel, the powerhouse fuel, is in a precarious position, with supply struggling to meet the voracious demand. This isn't just a bump in the road, it's a potential blockade with far-reaching consequences. As oil futures soar, touching the skies at nearly $95 a barrel, diesel's plight is even more stark. In the United States, prices have leaped above $140, an unprecedented high for the season. Europe witnesses a staggering 60% surge since summer, and the forecast? It could worsen. Supply and demand are at the heart of the diesel dilemma. The U.S. Energy Information Administration, EIA, reports a noticeable dip in distillate inventories, with a 7% deficit from the 10-year seasonal average. Yet this contraction is less severe than previous months, suggesting a complex interplay of market forces. Despite concerns, the EIA forecasts a modest growth in diesel consumption, buoyed by increased refinery capabilities and international production. Even geopolitical tensions, like those in the Middle East, have yet to derail the diesel supply chain. The scarcity of diesel is a clear indicator of supply chain stress, and as we've seen time and again, when diesel trembles, the market listens. Transportation could see operational challenges and cost hikes, leading to pricier consumer goods. Agriculture might struggle with disrupted processes, threatening food supplies. Emergency services and public utilities could also face dire consequences as diesel powers critical infrastructure during crises. Amidst this turmoil, WTI crude oil, a benchmark for oil pricing, is showing resilience. Analysts are keeping a keen eye on the $77.25 threshold. Staying bullish above this price point could signal strength and stability in the face of market adversity. It's a number that doesn't just represent a figure on a chart. It's a beacon of confidence for investors and a potential predictor of economic trends. Yet there's a glimmer of hope. The approach of cooler months may relieve the refineries, and some believe the market may see a reversal. But the shadow of concern lingers. Diesel's demand growth hasn't matched that of gasoline or jet fuel, but it remains a supply issue at heart. With the U.S. economy teetering on the edge of recession, an energy price spike could be the tipping point. As election campaigns heat up, Washington is acutely aware of the risks. To mitigate potential shortages, a global strategy is key. OPEC plays a pivotal role in balancing supply, while the world must reduce fossil fuel reliance. Alternative fuels like biodiesel and renewable diesel are gaining ground, with electric vehicles and hybrids making inroads in the consumer market. These shifts, alongside technological advancements, could help cushion the impact of any diesel scarcity. Looking ahead, the consensus is that fossil fuels, including diesel, won't last forever. The transition to renewable energy is gaining pace, with biofuel production capacity in the U.S. surpassing biodiesel. As sustainability becomes a priority, the future of diesel remains uncertain. Will it still be around in 50 years? Only time will tell. As we navigate the intricate paths of the global energy landscape, one thing is clear. The diesel dilemma is not just about fuel shortages, but about the very future of our energy systems. The world watches, waits, and wonders. Can the diesel dilemma be resolved, or is this the beginning of an energy crisis that will redefine the landscape of industry and transport?